So let me just ask you, what are your thoughts on the significance of that? How are you reading those comments?
I think at first thought, what I would say is that the CBN appears to be removing some sense of urgency from M&As around the banks, and we haven't heard any MOUs from now. I think so far we've had 4 MOUs, and if all things go well, we expect these banks to be acquired by the institutions that they've paired with. And so what would have left would be further institutions that would have Oceanic Bank, would have Spring and Bank PHB, and also ETB. And I think the implications in terms of financial implications of recapitalizing the banks, I don't expect it to be as large as it would be if the CBN or AMCON had to recapitalize all 8 banks. So I would say in terms of resources, CBN wouldn't need so much resources. That's as much as it would have needed to recapitalize all the 8 banks. So I think what we've seen, or what the CBN has tried to do right now, is to remove sense of urgency and make investors realize that the sector would still go on and would expect the reforms to go on smoothly and the recapitalization of all the banks to go on in the next, hopefully maybe before the next 18 to 24 months. At least that's if all things go well. And so that's what I would say, that's what I can read from what we've seen so far. And I would say in terms of the reform process, it appears to be going on smoothly. If you look at Oceanic Bank's performance so far, I would say its dependency on the interbank has reduced significantly from December 2009 to Q1 2010. It's reduced by over 60% now. And so I think in terms of reducing dependency on the interbank, the CBN appears to be, or the distressed banks appear to be moving in a positive trend. And so in terms of the withdrawal of guarantees, I think it will come in sooner than later, and we won't expect the CBN to keep on rolling forward the extension on interbank guarantees.
Let's talk further about what AMCON has done so far. Obviously, it has issued loans and bought up a huge chunk of the non-performing loans. How is that impacting on the market right now? You did mention just now the interbank market seems to be feeling the impact of the recent developments.
I'd say apart from the interbank market, if you look at the banking sector as a whole, there's the exchange of bad loans with AMCON bonds has improved the asset quality of the banks, and so banks can now extend credit better. And if you look at the banks that pass the CBN audit, they appear to they've been a significant reduction in NPL ratios, and you've also seen, at least over the first quarter of this year, we've seen improved credit extension as well with the banks. So I'd say what the AMCON has done so far is to, one, reduce interbank exposure, and also improve asset quality and help banks lend. And I think I would say we've seen some impact right now, and we'd expect to see more of it going forward as AMCON keeps on clean up the assets of the banks, because there was an AMCON second phase of purchase in Q1, and we expect to see that hit into the Q2 financials as well once bank release their H2 results. So I'd say overall we've seen AMCON's impact on the banking sector has been very positive, and it's really done a very good job cleaning up the sector, clean up assets, clean up the bank's total assets. And I would expect that going forward, as long as banks continue to be conservative and also continue to improve on their risk assets criteria, I would expect asset quality to be maintained at decent, to be strong, and also NPL ratios to be at very low levels going forward.
Let's come back to the rescued banks, and it's interesting that at some point we did get a sense that there are suitors for many of them, but it's becoming very interesting that closing transactions seems to be more difficult than many perhaps had thought in the past. Those rescued banks, obviously, I know they are outside your coverage right now, but what's your sense about the impact that they would have on, and the bearing that they will have on the market going forward in terms of when we do eventually see these M&As coming through, we've seen, for instance, the balance sheet of the likes of Oceanic. It's much smaller than it was, say, 2 years ago, because of obviously with the huge provisions that they've had to make and the huge losses. What are your thoughts on when eventually we do see M&As in the sector and these rescue banks are, should I say, a full part of it, and of course the CBN's lifeline from the interbank guarantees and so forth is pulled out?
I think it depends on how the new investors intend to play with this bank. So with an Oceanic Bank, for example, management was already talking about getting a national commercial license. That's showing that they would want to play within the Nigerian market instead. So with that, you'd expect that in terms of their assets, their risk assets composition, we wouldn't expect it to be as large as a bank like First Bank that has a total loan book of about 1 trillion naira. Currently, Oceanic Bank's loan book stands at 260 billion, and that's about 26% of its total assets. So I would, with such a bank, its loan book has shrunk significantly, and it's been reducing over the last.
It has the potential to grow loans.
Yes, it does have that potential going forward, but I think also it depends on, like I mentioned, how.
In your view, do you think we're going to see huge loan
growth
from the banks when they are recapitalized?
I think it depends on how the banks want to play it, really, because as long as you have if you have your risk asset criteria put in well, and you are ready to play within the Nigerian market, then you'll be able to grow your loan book as much as you want to. So if the bank has a target of 15%, for example, I would expect Oceanic Bank to be able to grow its loan book by 15%. But if you look at the distressed banks as a whole, their size in the overall banking sector has shrunk significantly. So I think, one, it depends on how management want to play those banks. So they might not be, I think the sector has moved on to some extent, so it might be difficult for them to play catch up. So an Intercontinental Bank or an Oceanic, it's be difficult for them to be able to compete with the likes of First and Union and GT going forward. And also, I think it's also important to realize that investors and the market as a whole also realize that these banks were not well managed in the past, and so you still see that caution with both customers trying to deal with the banks. And so in terms of how quickly you'll be able to compete with the likes of Zenith or catch up with GT, I would expect.
Unfortunately, we have to wrap now. Well, I'd love to take this further, but thank you Muyiwa Oni, an analyst from Stanbic IBTC, giving us his thoughts on the latest developments with regards to the recapitalization of the rescued banks in Nigeria.